Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, Eitel.
All right. Hey, everybody. My name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show. And you are in the right place if you are scratching your head wondering what is going on in the wild, wild world of real estate and mortgages. Each week, we come to you live right here, same time, same station, and answer all your questions. And we give you the info that you need so you can go out and make better real estate and mortgage decisions for you and your family. Because if you're like me, all of the swirling headlines around mortgages and real estate are super, super confusing. You'll see one day the headlines say housing sales plummet, and the next day they'll say mortgage applications rise on surge of buyer interest. And that just happened this week. I'm not going to go into all of the headlines, but I printed out 5 or 6 different headlines that completely countered one another from day to day. Same news outlet too, by the way. So I find that super, super confusing. But one thing I want to touch on today is FHA mortgages. As the market has started to balance, FHA mortgages are becoming more and more popular. One, because they have a lower interest rate. They have a lower mortgage insurance premium amount. And there are more liberal underwriting guidelines allowing more people to qualify for the loan, whether it's the debt to income ratio or the credit score. FHA loans just give more opportunity to more people. And if you're a seller, there's not a lot to be concerned with if you're selling a property that's in good condition with an FHA loan. There are a couple of nuances. They don't like chipping paint, cracked windows, stairwells of 3 steps or more without a handrail. Those are the type of things that get called out. But if the house is in good working order, livable condition, most often there's no issues with the FHA appraisal, and that's what scares a lot of people. However, I have come across a couple of instances this week that I want to call out that people get confused about with the FHA loan. So we're going to dive into that in just a minute. If you have questions or comments and you want to participate in this week's show, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime hotline. And Jen, my producer extraordinaire, is womanning the hotline, and she'll get your questions on the air. So let's dive right in. What I'm talking about with a couple of these FHA nuances, one is the 90-day rule. There's an anti-flip rule with FHA loans, meaning that the current owner of the property needs to have owned the property for at least 90 days prior to your contract date. So we call it the 91-day rule. You need to take the date that the seller closed on the property and make sure there's 91 days have passed before you write the contract on that property to buy it. Where a lot of people get wrapped around the axle is they think it needs to be 91 days from closing to closing. And that's not the case. It's 91 days from closing to contract. So that gets a lot of people screwed up. And I've seen some amazing renovations, some beautiful flips done spectacularly well, and us having to have the contract rewritten on that 91st day. Cancel the first contract and write a new contract on day 91 with all the same terms, but it's a little bit of a frustration if you're not expecting that. If it's news to the seller and the buyer, they get a little bit frustrated with that, and it's just a nuance. It's an FHA guideline, so just know that. How long has the seller owned the property? If it's been 91 days, boom, you can write the contract. If you write the contract prior to 91 days and you're getting an FHA loan, you're going to need to rewrite that contract on day 91 and cancel the first contract. So I wanted to point that out. That's called the FHA 91-day rule, and it gets a lot of people confused. Again, it's from closing to contract, not from closing to closing. So keep that in mind, because most contracts come with a 30-day closing. So if you wrote a contract on day 61 with a 30-day closing, your closing will be 91 days from the date of purchase, by the current seller, but your contract date's only 61 days. So that won't meet the guidelines. And a quick chain of title will indicate when they closed on that property. So there's really no getting around that. 91 days is the hard and fast rule from closing to contract. The other thing we see people get wrapped around the axle with is disputes on their credit report. In the old days, a common workaround for a lower credit score was dispute some derogatory trade lines, and oftentimes your credit score would increase. Well, the lenders have caught on to that. So if you have any disputes on your credit report, you need to have those removed. And it's not as easy as you think. Sometimes it can take a whole reporting cycle for a credit report to update. So you have to call all three of the reporting repositories, Equifax, TransUnion, and Experian, and request that the disputes be removed from the file and any of the comments alluding to the disputes, because there's two categories there. If you're looking at your credit report and it's, XYZ company and it says consumer disputes, then that's not going to fly with FHA. They're going to want the disputes removed. And that has to be done at the repository level. You're calling the big three, the TransUnion, the Experian, and the Equifax of the world. And it can be super frustrating and take a long time on hold and getting transferred to transferred. And then you're hoping that they've done what they said they're going to do, because I've seen it happen where multiple times phone calls were made, multiple times new credit reports were issued, and the derogatory accounts were still reporting on the credit report, making it impossible to close an FHA transaction. So 91 days and no disputes on your credit report are two of the big ones with FHA loans in particular. And there's nuances around credit reports for all loan programs, but today I just wanted to focus on the FHA loan as they're coming back into play more and more. They're becoming popular again. And they always should have been popular. They never should have been demonized as a second-class loan, because they're an awesome loan program. You get a lower interest rate. You're talking about a 3.5% down payment. You have a lower PMI factor. So the monthly payment on an FHA loan with 3.5% down compared to a conventional loan with 3% down, the FHA loan payment's going to be less. And whether we like to admit it or not, as consumers, we buy things based on the monthly payment. I talk to people all the time about their car loans, and they can tell me to the penny what they pay each month for a car payment, but they can't tell me what the interest rate is. And it's because they made that purchase based on the monthly payment. And when it comes down to the nut cracking, most people are looking for the lowest monthly payment when they're buying a house. And that's where FHA is becoming very popular again, not to mention all of the other benefits. The more liberal underwriting guidelines, as I mentioned before, you can get approved for 3.5% down payment with a lower credit score than a conventional loan. You can have more outstanding monthly debt versus your income with an FHA loan. We call that the debt to income ratio. So much more of a liberal lending product all the way around, not to mention that it comes with a lower monthly payment in most instances. And I'm talking about the minimum down payment loan programs. With FHA, it's 3.5%, unless you get down payment assistance, and then you can get into an FHA loan with a DPA component and have no down payment. But the minimum down payment for a conventional loan is 3%. The minimum down payment for an FHA loan is 3.5%. So those compared side by side, FHA is almost always a cheaper monthly payment. So those are a few of the nuances in the world of FHA that I wanted everybody to be aware of this week. But guys, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be back with more of the Mr. Mortgage Show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. Guys, if you have questions or comments and you want them on the air, just call or text 855-462-7292. That's 855-462-7292. Jen is womanning the Anytime Hotline, and she will get you on the air. Again, call or text that number, 855-462-7292, or just visit MrMortgageRadio.com. MrMortgageRadio.com. Scroll to the bottom of the page, click the email icon, and you can send her your questions via email, and she'll read them on the air for you. But hey, speaking of Jen and your questions, we've already got a few lined up back there. I think the natives are restless today. There's a lot of confusion and a lot of questions around what is going on. I thought the Federal Reserve was done raising rates, and here we go again. Guys, I'm happy to deep dive that or any specific mortgage questions that you have. Our goal is to give you the tips, the tricks, the strategies, the answers to your questions, and all the info that you need so you can make better real estate and mortgage decisions for you and your family. So let's throw it over to Jen and get to the questions right now. Go ahead, Jen.
Jerry sent us an email. How much are we typically able to borrow with a reverse mortgage? We don't have a mortgage now.
Hey, Jerry, that is a great question. We get it often. Everybody wants to know how much equity I can access. Is this even worth the effort? So sadly, there's not a hard and fast rule. The things that dictate how much equity you can access are your age, right? The interest rate, and obviously the value of the property, and are there any liens? But you mentioned there's no current mortgage on the property. So there is a rule of thumb. It's typically around 50%, but I say that cautiously because it could be 45%. It could be 55%. It all has to do with your age and the current interest rates for the reverse mortgage. If you have a $500,000 house, you're looking at somewhere around $250,000, and the closing costs associated with the reverse would be taken out of that. And then, of course, whatever mortgage, first, second, or any liens that are on the property would have to be paid out of that as well. And then the rest would be available to you in the form of an equity line. Essentially, it's like a credit line. It's actually earning interest for you, though, or you can receive monthly payments or one lump sum or a combination of that. So typically somewhere around 50% is going to be where you'll land. But I encourage you to visit MrMortgageRadio.com and click that More About Reverse link, and we can start the dialogue. And I'm happy to run very specific numbers for you. I don't have to pull your credit. I just need the property address. I need to know if there's a current mortgage on the property, and then your birth date. I don't need a social, though. I don't have to pull your credit, to give you a much better idea of how much equity would be available to you. And I'm happy to do that for you if you'd like. So great question. And guys, we're talking to more and more people about reverse mortgages. And I'm not going to go into my personal journey down the reverse mortgage road. I got involved because of a family member. But man, it's an amazing product for the right person. But it's just a tool. And I say it all the time. It's not a tool for every job, right? It's a hammer. You can build a house with a hammer, but you can tear a house down with a hammer. So the reverse mortgage is a fantastic tool for the right person in the right scenario, and it can change your life significantly for the better. And I love these conversations. So I encourage you to visit MrMortgageRadio.com, hit that More About Reverse link, and then let me do the calculation for you. But I appreciate it. Hey, Jen, do you have another question?
Valerie sent us this. I was on the FSBOzilla website but can't download the book. Is it possible to download it on my Kindle?
I wish. You know what, Valerie? You just gave me an idea. I'm going to submit the book to Amazon and see if that's Kindle is Amazon, right? Yeah. Anyway, great question. There should be a red bar underneath the book reader because it's a flip book online, right? So go to the flip book page and there's a big red bar. If you click that red bar, you can put your email address in there and they'll send you the book as a PDF, and you might be able to transfer that file over to your Kindle reader if you prefer. but they'll also send you the 4 do-it-yourself guides. One is on how to take awesome listing photography with just your cell phone camera. And I'm sure there's a photographer out there saying, yeah, it's not going to be as good as mine. I get it, but you can get a great photograph out of a cell phone camera. It's certainly not as good as a pro, but you can definitely get the job done. There's a guide on how to do it. There's a guide on the recommended little fixes and touch-ups a lot of people overlook that come back later in a home inspection. That's a second guide. There's a guide on staging and decluttering, and then one on creating the curb appeal. That'll make a big impact. So you'll get the book and the 4 do-it-yourself guides if you go to FSBOzilla and click on the red bar. And guys, if you're out there curious, if this is the first you're hearing of it, not too long ago we launched this program to help for sale by owners, FSBO, often referred to as FSBO, and then I just threw the Zilla in there because I like the Godzilla monster, and the title of the book is FSBOzilla, the Commission Killer, because a lot of people are going the for sale by owner route and foregoing that big commission. And at these sales prices, man, these are real numbers. We talked about the average salary in this country was somewhere around $55,000. Well, on a $500,000 property, you could pay upwards of $30,000 in commission. That's a half a year's salary for somebody. So it's the do-it-yourself route's not right for everybody. But if you are inclined to give it a shot, that FSBOzilla resource was created for you. No cost, no obligation. It's out there. Check it out. Let us know what you think. You can find the link to that at mrmortgageradio.com. But Valerie, thank you for that question. I hope that helps, and maybe that's the way to get it over to your Kindle. But I appreciate it. We've had an overwhelming response to that FSBOzilla program, guys. And I'm not anti-agent. I'm proud to be part of the Really Great Agents Network. But paying a real estate agent's not in the cards for everybody, and a lot of people attempt the for sale by owner route themselves, and we're trying to set you up for success. And I get this question often, what's the catch? Guys, the only catch is I want to be the mortgage guy. I want to pre-approve as many people as possible who are interested in your property, so you've got a rock solid approval and your transaction is going to close and you can move on with your life. And I selfishly get the opportunity to meet people who need my mortgage services, because as much as I love doing the radio show, we are a mortgage team and we get paid to originate mortgages. So I hope that gets that out of the way. But that's it. There's no hook. There's no catch. That's all there is to it. But guys, you hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this very short break. We'll be back with more of the show.
Tired of realtor commissions gobbling up your hard-earned equity? Say hello to FSBOzilla, the commission killer. FSBOzilla is your free, no-obligation resource for selling your home by owner. Yes, you heard it right. Free. No gimmicks, no catches, just everything you need for a successful for sale by owner process from start to finish. Check out FSBOzilla.com. You'll never have to show your home to a time waster, tire kicker, or unqualified buyer. And say goodbye to those pushy realtors trying to snatch your listing. No more untimely calls, no more uninvited strangers. Ever wonder who they're letting into your house? Grab your free copy of the book, FSBOzilla, the Commission Killer, today. Keep your equity where it belongs, in your pocket. Sell it yourself, save thousands. Visit FSBOzilla.com. FSBOzilla, the Commission Killer. That's FSBOzilla.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Guys, keep your questions coming. 855-462-7292. You can call or text that number. Jen is womanning the hotline, and she'll get you on the air. 855-462-7292. Or just shoot us an email. You can do that by visiting mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page, click the email icon, and you can shoot her your questions that way. She'll read them on the air for you. But guys, let's keep your questions rolling. It's always my favorite part of the show, and I know we've got a few stacked up back there, so let's try to get through a few here. What do you have, Jen?
Mary is asking, I want to start buying rental properties. Are there mortgages for first-time investors?
Hey, Mary, that's a great question. Another place a lot of people are using all of this newfound equity wealth is buying investment properties. So to answer your question, yes, there are many, many programs available to first-time investors. One of them is the landlord loan. You hear me talk about that one so often because it's one of the more popular loans when buying rental property because your personal income is not underwritten. We're looking at your credit, we're looking at your assets, and we're looking at the income produced by the property. As long as the property supports the debt load, you're off and running. So that landlord loan has the availability to be utilized as a first-time investor. So I hope that helps. And we talked about it I think it was last week, maybe the week before. We had come up with a strategy and it was based on a conversation I had with a friend of mine who was super concerned that his young child was not going to be able to purchase his first home based on his scholastic interests and where he's likely going to land in the professional world. By the time he's ready to buy a house, unless the world comes to an end, he's most likely not going to be able to pull the trigger. So we came up with this idea, and I kind of had this cutesy name where you're putting your child's first home on layaway, right? Because I think of everything in pictures. I'm very simple, born and raised in Florida, simple guy thinking pictures. So that layaway idea made sense to me. And we talked about pulling some of the equity out of your property and going and buying an investment property. And what brought that to mind was the landlord loan is a great tool to utilize for that. And then renting the property for, I don't know, say 10 years. 15 years. I don't know how young your child is and where you would start in this cycle, but think this one through for a minute. You're trading equity in your current home, or some of it anyway, not all of it, for equity in a rental property. You put a tenant in there, let the positive cash flow pay down the principal and even make some money. You have the write-off benefits of owning the rental property. There's benefits to owning it in addition to just the cash flow, but more importantly, you're owning it at today's prices. So in 10 or 15 years, when your child's ready to strike out on their own and make their way in life, you can sell that property to them with a gift of equity, pull some money back out of it so you're made whole, and they're off and running with a great, great head start in life, and they didn't have to go out there and fend for themselves and find that first home and save for 5 or 10 years to get a down payment together. And if someone's trying to do that in this market today, they're being outpriced by appreciation and by the cost of money. Imagine if you would have done that for your child 10 or 15 years ago, how much equity they and you would have in that property today. So the landlord loan is a very, very powerful tool, and all of the newfound equity people have are making them think a little bit outside the box in trying to come up with ways to maximize that current equity position to create additional opportunities. So I know I went long on that, but I wanted to throw that in there because we are seeing that utilized for that reason as well. Hey, Jen, throw me another question.
Sandra sent this one. We've been wrestling with the idea of getting a reverse mortgage. I'm concerned about leaving my children with a bunch of debt. What happens if they can't pay it back?
Hey, Sandra, that is a great, great, great question. A lot of people have this concern, and it's mainly driven by the idea of what happens if I owe more than it's worth when the kids inherit the property. Because from the standpoint of just inheriting it with equity, so they would have to pay it off like any other mortgage. It would be satisfied by either refinancing it or selling it, and your children would get the equity, just like a normal mortgage. I can't stress that enough. But here's the part that confuses a lot of people, and I'm not sure if this is what you're asking, but I want to touch on it. What happens if you owe more than the property's worth when you die and you leave the property to your kids? Are they then stuck with the debt burden? Do they have to satisfy the negative equity position? The answer to that is no. It's a federally insured loan program, and they can slide the keys across the desk to the bank, and the bank deals with it. It's a federally insured loan program administered through FHA. You buy a mortgage insurance policy as part of the closing costs, and that prevents a negative equity position being passed down to your children. And that applies if you have a lot of other assets as well. You're not going to have to sell this to pay that. The reverse mortgage itself is non-recourse in that sense. So I hope that answers that question. And guys, we are talking to more and more people about reverse mortgages, primarily, as I mentioned earlier in the show, because the fixed income senior is just drowning in all this inflation. And if that's you and you want more information, go to mrmortgageradio.com and click on the More About Reverse button, and you can start the dialogue there. There's a short video. You can request the booklet. It's no pressure, no obligation. We are happy to have the conversation with you. Guys, if you've heard my story, I got involved in the reverse mortgage space because my mother was considering a reverse mortgage, and I wanted to learn everything I could about it. And I dove headfirst into it and got certified in the space. And I love the loan product, but it's not right for everybody, and it's certainly not right at every time. So let's have a conversation if you're truly considering it. Hey, Jen, throw me another question.
Tony is asking, if we use the rec refinance to pay off our credit cards at the closing, are we able to keep the cards or do they get closed out?
You're one of those consumers that make up that 117 index this month, right? You're ready to go spend again. No, sir, you do not have to close those out. You can keep those accounts open. Guys, what Tony's talking about is the rec refinance allows you to qualify for your refinance based on your future reduced debt to income after you pay the credit cards off. Unlike a home equity line of credit, we're talking to more and more people who don't qualify for the equity line because of their debt load. And we're able to say, okay, we're going to pay off the Discover, we're going to pay off the Visa, and we're going to pay the car payment off at closing. Then we can subtract all of that debt from your debt to income ratio. You now qualify. The caveat is it does have to be paid at closing. But Tony, to answer your question, you do not have to close those accounts out. I hope that answers the question. Keep them in the freezer, though. Be very careful not to run them back up. But hey, guys, you hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this very short break. We'll be back with more of the Mr. Mortgage Show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing mrmortgageradio.com. That's mrmortgageradio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Tired of realtor commissions gobbling up your hard-earned equity? Say hello to FSBOzilla, the commission killer. FSBOzilla is your free, no-obligation resource for selling your home by owner. Yes, you heard it right. Free. No gimmicks, no catches, just everything you need for a successful for-sale-by-owner process from start to finish. Check out FSBOzilla.com. You'll never have to show your home to a time waster, tire kicker, or unqualified buyer. And say goodbye to those pushy realtors trying to snatch your listing. No more untimely calls, no more uninvited strangers. Ever wonder who they're letting into your house? Grab your free copy of the book, FSBOzilla, the Commission Killer, today. Keep your equity where it belongs, in your pocket. Sell it yourself, save thousands. Visit FSBOzilla.com. FSBOzilla, the Commission Killer. That's FSBOzilla.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. And guys, you have offered up some awesome questions. Let's keep them coming. 855-462-7292. That's the Anytime hotline. Call or text 855-462-7292, or shoot us an email by visiting mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page, click that email icon, and you can shoot your questions to us via email. But speaking of questions, I'm going to toss it right over to Jen, and we'll keep your questions rolling.
Natalie sent us this one. Just want to publicly thank you. I called last week with an old roof and canceled insurance. Anyway, your team is awesome. We've got the insurance figured out, and we started the refinance. You guys are the real deal. Thank you, Natalie.
Yes, thank you, Natalie. I'm so glad we were able to get that sorted. And that builder's risk insurance policy, a lot of people don't understand it. And in this instance, guys, just to refresh your memory, or maybe you missed the conversation with Natalie, she was canceled by her insurance company, could not get a new policy because of the roof, but couldn't get a roof without doing a cash out refi, but couldn't qualify for the refi without insurance on the property. So we are doing a builder's risk policy. Not us, our insurance referral partners are doing a builder's risk policy to insure the property during the building or during the construction period for the new roof, which enables them to put the homeowner's insurance on the property now so we can close the refi and get her the money to do the roof. So thank you for that, Natalie. Thank you for the public accolades, and we are super happy that we were able to help you. Thanks for that. Hey, Jen, throw me another question.
Michael sent this one. I went to the FSBOzilla site and requested the book, but honestly, I'll never read it. Can you give me a quick idea of how this works? I will be selling without an agent, and I'm trying to figure out your program.
Hey,
Thank you for your honesty, Michael.
Yes, thank you for your honesty. Man, I've got a whole bookshelf of books that I will definitely read one day, but I get all excited. I buy the book. It arrives. It looks more like a doorstop or Atlas Shrugged than I thought it was. And I'm like, I'm not going to get through all of this. Let me put it up there and wait. So, hey, I appreciate you giving us a shot at least answering your question. So, guys, FSBOzilla is super, super easy. It's very, very simple. I wrote a book called FSBOzilla, The Commission Killer, which it's not a novel. It's more like a guide, if you will, but it's all of the common problems people run into when going for sale by owner and workarounds. And we did that to help people through this process. But what we're offering to do is essentially be your pre-approved lender, if you will. And we'll field the phone calls and make sure everybody is approved. And we do that quite simply by asking the hard questions to the person who's inquiring about the property. And if they're already approved with another lender, that's fine. There's zero conflict in that. We do ask them to shoot over their approval so we can review it and make sure that it is truly a DU or LP approval. And I'm not going to bore you with all of the differences, but it's hugely different if you're in contract with somebody that you've got the most solid approval possible. And if they are, we bless it and congratulate them, and you show them the property, and hopefully they buy the house. If they don't, we want to pre-approve everybody else who calls so you know that this is a rock-solid buyer who can close. But here's the cool thing. You don't have to show your property to anybody who's not approved. You already have alleviated that. And then we've got all kinds of strategies that we've built into the program where you show your property for a 2-hour window once a week to pre-scheduled approved buyers only. There's a ton of stuff that we've put together to make your life easier. And guys, the reason we're doing this, it's not charity. I get to meet people who need mortgages, and that's my business. So I'm happy to help. My team is happy to help because we want to pre-approve as many people as possible. So Michael, that's the program in a nutshell. We've put together many, many other resources. I mentioned the guides earlier. There are title companies, title attorneys, transaction coordinators, home inspectors, value report. We'll run a value report for you so you know what your property is likely to appraise for, so you ensure that it's priced correctly. So, Michael, give me a shout after the show, or Jen, if we have, okay, I'll shoot you back a quick email and then we can jump on the phone together, or do it via email. I'll answer any additional questions that you have. I want to keep it rolling though. Thank you for that one, Michael. And thank you for your honesty.
Meredith has a question. What happens in a reverse mortgage to our unused equity line if property values decline?
Hey, Meredith, that's a great question. It's your money. It's not really an equity line. I call it an equity line because you draw against it as you need it. But once you close the loan, that's your money. So if property values go down, the bank's not happy, but you're fine. That's your money. They can't take it away from you. So brilliant question, though. I appreciate that one. Jen, throw me another question.
Hope wants to know. I've accepted a new job and wanted to take a month off before starting, but my brother told me A gap in my work history will be a problem when I try to buy next year. Is this true? How long can I take off? Thanks.
Hey, Hope, brilliant question. And your brother is not incorrect. It could be a problem. So let's stick with FHA for a minute, because I don't know what program you would apply for, because they all have slightly different requirements. But with FHA, you'll need to be on the new job for at least 6 months before you apply. Then you would have to have 2 years work history prior to the gap. So if you've got 2 years uninterrupted work history and you want to take 30 days and you're not going to apply for a mortgage until you're 6 months at the new job, then based on the guidelines, you should be okay, if that makes sense. If there are other employment gaps that require additional explanations, then I would need to know that. But if you've got 2 years of consistent history, a 30-day gap, 6 months on the new job, and then you apply, as far as FHA guidelines are concerned, you should be fine. So hope that helps. Thank your brother for giving you some good advice. All right, Jen, throw me another question.
Dennis just sent this. Okay, so your idea about buying a rental and then gifting it to my son later made a lot of sense to me. How does the gifting of equity work? Will I be able to pull some money out when I gift it to him?
So this is a great question. And man, I'm excited that you were paying attention. So to answer your question, yes, you can pull some money back out when you sell the property to him. You don't have to gift him all of the equity, is what I'm saying. So you as the seller can gift him just enough to get him qualified, and then you can pocket the rest in the form of capital gains. So to answer your question, yes, you can definitely pull some money out for yourself. So I hope that helps, and I would welcome the opportunity to talk about this in length. If you're seriously considering it, I'm happy to help any way I can. And thank you again for the question. I'm super excited that this made sense, because I think this is an opportunity for people to capitalize on their newfound equity and set their kids up for success instead of watching them struggle later. And let's say your kid is never ready to buy. What's the worst that happens? You've got a rental property that's performed hopefully well for the last 10 or 15 years. So brilliant question. And guys, this strategy is getting attention because home values are very, very sticky, even in the face of these interest rates. And parents and grandparents are super concerned with how their kids are going to get, or grandkids are going to get started in that very first house. So appreciate that one. But guys, you hear the music, you know what that means? Man, oh man, we have wrapped up another week right here at the Mr. Mortgage Show. Guys, if you need us during the week, MrMortgageRadio.com, MrMortgageRadio.com, everything's there, from the Facebook page to the reverse mortgage stuff to FSBOzilla, everything. MrMortgageRadio.com. All right, guys, have an awesome week. Jen and I will be back next week right here. Same bat time, same bat station. Be good.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
Tired of realtor commissions gobbling up your hard-earned equity? Say hello to FSBOzilla, the commission killer. FSBOzilla is your free, no-obligation resource for selling your home by owner. Yes, you heard it right. Free. No gimmicks, no catches, just everything you need for a successful for-sale-by-owner process from start to finish. Check out FSBOzilla.com. You'll never have to show your home to a time waster, tire kicker, or unqualified buyer. And say goodbye to those pushy realtors trying to snatch your listing. No more untimely calls, no more uninvited strangers. Ever wonder who they're letting into your house? Grab your free copy of the book, FSBOzilla, the Commission Killer, today. Keep your equity where it belongs, in your pocket. Sell it yourself, save thousands. Visit FSBOzilla.com. FSBOzilla, the Commission Killer. That's FSBOzilla.com.